All right. Hey, everyone. Let me just adjust my microphone here. Hold on. All right. How you doing? Okay, so welcome to my stream. Let me go check over my chat, see if I can see you guys. All right. Alex from Romania. Grego, how are you? From Greece. I had no idea you're from Greece. You may have told me that, and I don't remember. From Greece. All right. I don't have any Greek accent for you. I'm sorry. But Alex from Romania. I like, you guys, I like saying that a lot. So anyway, welcome you guys. Anyone else? Welcome to the stream. UTXO, he's here early today. Bitcoin is a new gold. Yeah, things are changing. Yeah, man, I was wrong about this Bitcoin move, huh? On my trading view article. But anyway, we're going to talk about that. Hey, I'm not always right. I don't claim to be always right like all these other frauds. So anyway, welcome guys. So if you're new to the stream, let me just explain real quick how it works. The first thing I'm going to do is just run through the economic calendar real quick, right? So that we're aware of what major events are coming out this week. Hey, Nugs. Second, we're gonna go through the charts, right? So Bitcoin, Nasdaq, gold, oil. If you have a chart you'd like to see, put it in the chat now so I can get to it. And then we'll see if we have some time. I could run through some Trade Scanner Pro. Maybe we have some trades on this time frame worth mentioning. We could take a look, right? So anyway, so let's start with the economic calendar, shall we? So this week there were a couple of things. We have PPI, which I believe is tomorrow. Then it's followed by CPI. Those are 8:30 a.m. numbers. And then on Friday we have Michigan consumer sentiment. I believe that's a 10 a.m. number Eastern time or 10:30 a.m. You want to double check those timestamps. But obviously the inflationary numbers, we know that those are going to be a big deal, right? They can move the markets in a major way. But don't lose sight of the Michigan consumer sentiment, because that at one time was just an obscure number. No one cared about that number. But because we are in the situation that we are in economically in this country, numbers like that suddenly have more importance, right? Because if the consumer is showing signs of whatever weakness, that means we may be anticipating a softer holiday season, right? And that's right around the corner. We're now at that point. So over the next couple of months, we have some major economic reports beginning with next week. We have the FOMC meeting, the highly anticipated FOMC. And based on where the Fed rate tool is right now, there's like a 99% chance or a 100% chance that he's going to cut 25 basis points after that horrendous non-farm payrolls number that we had on Friday, once again. So it's hard to understand why the market continues to rally and just have a great time when we're having these red flags all over the place. I mean, I believe it was the August employment numbers were revised lower again or something like that, and that wasn't even the full revision. They still have another revision to go or something like that. It's like the labor market is clearly not in good shape. And as we know, that we can't even rely on government numbers. So we don't even actually know the official state of the labor market. We have to go by these favorable or whatever government numbers, which we all know we can't rely on. So with that said, this is what I have to say about that, because it could be confusing. And I watched a number of videos where people are like, I don't understand. The S&P keeps on rallying, and we have this economic situation that's pretty clearly not good. Well, understand that I've seen this numerous times. We could go back to like 2006, 2007, 2005, that time period right back then, and there were red flags all over the place. There were back then, there was no YouTube. Like YouTube existed, but it wasn't like it is now. So back then, you had like economists and stuff, and they would have a blog, and you'd go look at their blog. And there were people that clearly saw the red signs, and they would make these pretty clear arguments. And the market just shrugged it off for years, okay? For years. And then when it became too obvious, that's when that's when the catalyst came in and changed everything, right? But the vulnerability had been there for years, even though the market was pushing new high after new high after new high after new high. So this could be that type of situation where there are clear red flags and morons could see the red flags, but the market shrugs it off until some catalyst comes out, something comes out that shines a spotlight on these vulnerabilities, like an extremely weak labor market. So we have that. We have the deficit situation. They're going to cut rates, but they're going to create inflation. It's a lot of things that don't make sense, right? They're going to create more inflation than we have now, and we have an inflationary problem now. But then they want to auction off their bonds to borrow more money, and now they're running the risk that they're not going to be able to sell their bonds. So the Fed has to step in and buy them, right? What's that called? Quantitative easing, right? So it looks like everything that's lining up is just for dollar going to zero. That's just what it looks like. I don't understand the strategy behind it. I don't understand their agenda, but obviously the stuff that's in the news and all that is just like on the surface. That's what they're telling us. We don't know what's really going on. So it's hard to make assessments. That's why, you know what, I rely on technical analysis. The fundamentals, you just have to be aware of some of these things because it's going to be how the market reacts. You know, the BLS has been giving us inaccurate data for who knows how long, and it's still probably inaccurate, but the market still behaves in a certain way as a result of whatever the official data is. So we need to be aware of it, no matter what our opinion is, right? So that's why I use the charts to at least give me a sense of, okay, is this high risk or is this low risk? And to what magnitude? As an investor, as a trader, like I need to separate all that out. And as far as investing goes, man, I don't like anything. Like a week ago, I was talking about the S&P. I want to buy S&Ps, but I can't even buy one share. I can't, like, I want to, but I just can't do it. I just don't want, I want to, but I don't want to. Okay. The real labor. Ah, yeah. I wonder what else is on her desk. So, anyway, yeah. UTX. So I don't know what to tell you, you know? So that's why I go by, I look at, I assess risk based on technical levels. And I think the technical levels right now, everything points to high risk. So as far as investing goes, going back, like I think using the April situation with that tariff surprise, because again, the market knew about the tariff. It wasn't a surprise, but when the details came out and a light was shined on it, then the market, everyone, oh, I wasn't expecting this. I think we're going to see that type of thing again. So use that as your blueprint for investing. That's what I'm doing. I want to see something similar to that, right? Before I even get more serious about investing. And my one share at a time idea, I still like that idea, just not at these levels. I want to see at least a decent pullback. We'll talk about that when we get to the S&P, but I just think we're just in nonsense mode, and I just can't buy anything when we're, as an investor, I can't do it when we're in nonsense mode. It's just pointless. That's my opinion. So let's begin here with Bitcoin. Let's talk about this Bitcoin situation and why I called it a short the other day, and certainly not looking good as a short. But let's talk about what's happening here. So the short that I mentioned, that I described in my TradingView article, like I said, I'm not always right, was here. Okay, that was the short because we had this bearish pin bar, which I was pointing to with this arrow, and we broke slightly below it. Since we broke that low, we've just been going up. Right now, here's the thing. So we're retesting 113K basically, right? That level has proven to be a resistance. It was an old support. It's acting as a resistance now. I suspect we can see a double top there. The other thing that you have to keep an eye on with this is this structure right here, right? It is a higher low. Oh, hold on. That is a higher low. This right here, it's a higher low, which is a bullish structure. I certainly agree with that. But the thing is, when we look at the wave counts, this is likely a B wave, right? And as you know, the B wave is the one that sucks everyone in. So if this is the A wave of the broader corrective move, if this entire thing here is the A wave, which it very well may be, And this is the B wave, right? 113 may be a point where it turns, or maybe it goes to 118, which is another significant level. This up here, up in here, right? It would match with this cycle high right here. If we are truly in a consolidation and we're no longer in a trend in the shorter duration, then these resistance levels are more likely to hold. There's no guarantee that they will hold, but they're more likely to hold, and that's how you have to treat them. So 113 would, 113 would be first. If it breaks, you're looking at 118. Shorting this right now, like again, as you know, I'm not a big fan of shorting Bitcoin, especially on this time frame. If I do it, if I ever do it, it's on small, day trade time frames. But I haven't even been involved in Bitcoin in a while. I've been focused more on the Nasdaq. But when it's going back up to this resistance right here, you have to wait for a clear signal or work on a smaller time frame, right? I would be anticipating a bearish signal, but if it clears the level and you're pushing 114, 115, that means the bearish scenario is not sticking and you have to adjust. So the B wave may go to 118 before it turns, right? B waves typically have they're usually 3-leg structures, right? So this would be like the third leg we're on right now. But the usually a lot of times with the B wave, the initial leg is typically 5 waves. I can't really count 5 waves in there. Even microwaves, I can't even count them. Maybe if I go to a 1-minute chart, maybe I'll count them. But it's hardly relative to this magnitude, right? B waves are usually like 5, 3, 5. That's typically like the pattern. And I don't know, this doesn't really look like that yet. So it's hard to say. Wave counts are subjective. So you have to treat them with that limitation. They can give you a general roadmap, but if the roadmap doesn't stick, you have to adjust. This is why people don't like wave counts, because of that subjectivity. It's like, oh, 1 minute it's this, then it's that. Well, that's the market. So the wave count serves as a roadmap until the roadmap is no longer valid. Then you have to adjust. So at this point, I suspect that this structure right now is a B wave, which means once it completes, then we're looking for the C wave. And the C wave is often like a wave 3. It's like very dramatic, right? And if that's the case, we could see the 100K test. We could see the 90K test or 95K test. But that can take a month to play out, right? Maybe longer. Now, this magnitude that I suspect we're in, if we have the 5 waves complete, which I don't know, this can go either way. Like, I would think that the initial wave for a broader magnitude would be bigger than this. So we may not be in that fifth of the fifth wave and now corrective wave situation. This may still actually be potentially wave 4. We got the overlap, but I could be wrong about the overlap, right? My overlap level could be wrong, and this could still be wave 4. So that's tricky and it's confusing. I agree. So that's why, I'm going to go with the bearish wave count unless it proves me wrong. If it proves me wrong and this turns out not to be a B wave, meaning we break through 118K and we pull back and we produce another little mini wave 4 situation, then I'd be like, oh, most likely this is the wave 5, right? That's what I'm telling you right now, that's how I'm going to adjust. So again, it's not like I'm flip-flopping here. I'm just going with what the market is telling me. And that's what I do. That's why, again, when it comes to this type of analysis, especially, risk management is really like the key to making money with this type of stuff, because the market is random. And we can use these techniques like wave counts to give us an idea. And as you know, a lot of times it steers me the right way, but not every time. And that's the case with anything, right? Any type of technique that you use. And if wave counts confuse you, which is perfectly normal, then resort to support and resistance levels, right? That's usually what I'll do. If the wave count's not making sense, I'll just look at the support and resistance and say, okay, wave count aside, I see a support, I see a resistance. And if it breaks the resistance, like it may do here, then that's a new piece of information. If it respects the resistance, which so far it's doing, and we see a new sell signal this week, that means I'm still going to go with the bearish scenario. Does that make sense to you guys? Let me know if that's confusing to you. All right, because that could be tricky, especially to someone that doesn't use wave counts. You'd be like, yeah, why bother using them? Because they're very helpful most of the time on this, especially in this time frame. I don't rely on wave counts on the small time frames, but on large time frames, I look at that because they can be helpful pieces of information, especially when you have a wave 4 or a wave 5 that's in play, right? Especially the wave 5s. That's what keeps me out of buying into these things too early. All right, so that's Bitcoin. And as far as investing goes, I still think these levels are horrendous, right? We go to the weekly time frame. I mean, look at this. It's just another pullback, right? And we're still near these highs. So these are not investing levels. In my opinion, investing levels are like 95K, 90K. That would be the first area where I'd be like, oh, these are good levels now, right? That would be the first area where I take that kind of interest as far as buying to hold as an investment, right? Meaning long term. Okay, so that's Bitcoin. Let me know if you have any questions about Bitcoin. All right, now I'm going to move on here. Let's take a look at, usually look at the Nasdaq, but we can look at the SPY. Let's look at the SPY. It's the same thing, right? This is the same thing. The Nasdaq's going to look the same. This is the daily time frame. And I keep saying, like I gave that lecture basically a week earlier about how I think we're in ridiculous mode. And look at this. We are in ridiculous mode. That's a resistance right there. We're just, notice how we're basically getting tighter and tighter. We're just consolidating. You see this? We're just consolidating into this little space here. That is not a bullish sign, in my opinion. That is basically when we get these consolidations, this thing is just moving on hot air. So why do I want to buy even one share at like such a level? I just don't. It's like not even one share. So today we're up what? We're up what, $1.62. I mean, that's nothing on this thing, but it's still bullish. It's still up. On Friday, that non-farm payrolls number gave us that bearish candle, but there's no follow through. That could be a function of the lower volume. That could be a function of no one wants to take any major positions going into the heavy numbers we have coming up, especially like the non-farm, not non-farm payrolls, the FOMC next week, right? So we may see like lighter volume and indecision as a result of that, right? So our first support, really, and I'm going to call this a minor support on the S&P, is this price here, 641.20. Or I'm sorry, no, 634.92. So 635. That's our first support on this thing. There's a double bottom there. And also, it was an old resistance back here, sort of. Not the exact number, but you see what I'm talking about, right? Basically, these things work like in areas or in zones. You have like a zone over here, right? So that's the first area that I would be maybe open to buying my one share idea, right? And that's, what is that? That's like, where are we now? 12 points lower. Keep in mind, the SPY, the SPY, on a really bad day can do like 10 points. On a really bad day, 10 to 15 points. If it does something like that, that means the NASDAQ is like minus 1,000, right? When it does something like that. So on a more normal negative, like a bearish day, you're looking at 4 or 5 points, right? But when volume comes back, and that's, we're now like in volume returning back to normal, but we're not there yet. We're far from it, but we're on our way now, right? The bottom of volume is typically in August, and usually like first week in November is usually when volume is back to normal, when we're seeing wide, your typical wide ranges like on the NASDAQ and stuff like that. So when we have that kind of volume again, that's where you can see a minus 15 point day on something like the S&P, right? So we see a day like that. I mean, that would put us back here. Like that would be like one candle, okay, in this type of situation. But I'm not anticipating that even in the next couple of weeks because of the general volume. But maybe next month we could possibly see something like that. I mean, look at these candles here, right? How big is this candle? 629, so 630 is the low. That's about a that's about a little over 10 points. Okay. This candle right here is just over 10 points. That's your typical pretty bad day. If you go back to April, right? And this is the blueprint that I was telling you about. Use this as your investing blueprint right here. Use this because this can happen again pretty reasonably, right? And as you could see, this took like a few weeks to play out. This wasn't just one day or 2 days. But if you look at the ranges, right? 599 low. Again, another like 10-point move in one day. Okay? How often were we getting moves larger than 10 points? This looks a lot larger here. 555 to 573, right? So that's almost 20 points. That's like a 15 or 16 point day right here. But you see, that's not your typical day. Even this in this bearish situation. Look at this one. Okay. what is this one here? 502 to 535. now that's a massive day. But these days are rare. Even in this series, these days are rare to have one that big. Okay? And then look at this one. Does anyone remember what happened on this day? Does anyone remember? how many points is this one? 485 to 547. That's nuts. That is nuts. Okay? You don't see, these are very rare moves. So keep that in mind. And just because you have a rare move doesn't mean it's going to turn. Like if you bought in on this day, it still went significantly lower the next day. That's a green candle, but there's still a much lower point, right? If you just measure that from the low point to from the close, that's another 22, 23 points lower in one day, right? No one remembers? Can anyone still hear me? I don't see anyone saying anything in the chat. Maybe you guys can't hear me. Can you guys still hear me? No one remembers what happened on this day? That's the day that we had the little heads up from the president. Good time to buy. That was this day. Okay. And then they came out with that, the tariff delay or whatever it was, and the market went berserk. Right? So my point is, these candles that we're seeing right now, right, that's right, Nugs, that was on that day. And early, before the market opened that day, we got a tweet saying, now is a good time to buy. That's a tweet that we got, okay, before that announcement came out. Anyway, so you compare those massive candles to look at this nonsense we have here, okay? All right, look at this nonsense we have here. So it's meaningless. So my point is, when we start selling off, we should be seeing large candles, 10 to 15 points on the S&P, on the SPY, something like that. And it can be for a sustained period, not just 1 or 2 days. That tariff drama was on for like 3 weeks or whatever, right? What was it? It was long. Actually, it wasn't that long, but that was May. Is that May? No, that's April. Right? So that was February to April. That period. So I think the tariff drama started here, actually here. Yeah, it was like here. It was around here somewhere, right? He came out with it like on a Wednesday. It was actually in April, but the market had been selling off previous to that, as you can see, right? So use that as a guide. Why was the market selling off over here? Whatever, I don't even remember the reasons why it was selling off here. And then that tariff thing was just like the second part of it. So use that as your blueprint. We're not even in sell-off mode yet. We don't even have a little string of selling. We don't even have that yet. We're still on the highs. So that's my argument and why I won't even go near this thing with even my one share idea, because we don't even have the beginning of the sell-off, right? Does that make sense to you guys? Do you find that interesting with the S&P or no? And look, if you don't find this interesting, please let me know. I won't talk about it. But I find it interesting, and I want to make sure that I'm delivering value, and that you guys are like, oh yeah, okay, that's good to know. But if you're like, oh come on, man, can you get off the S&P? Let me know, please. You won't hurt my feelings. Trust me. I got plenty of girls to do that to me on a regular basis, so you guys won't hurt my feelings. So, all right, let's move along from the SPY. If you have any questions, please let me know. I'm going to move along now. Okay, cool. I just want to know, guys, you give me feedback and I adjust my stream so that it's worth your time. Now, I don't need to do this for myself. So let's move along. Let's take a look at, and guys, let me know if there's any stocks or anything you want to see. Put that in the chat now so I can go back and I can cover your stuff. Okay. Yeah, Greg, I'll tell you, the women suck, man. Plenty of them hurt my feelings. I don't even have feelings. I don't even have feelings anymore. All right. Sure. Okay, Ricky, Erdia. Ricky from London, from the UK. But he's not, he probably doesn't have a British accent. Erdia. Okay, Ricky, I'll put it on the list before I go to the pub. All right, let's take a look at gold. We'll do gold and oil, and I'll start jumping to your stocks and stuff that you want to see. So let's jump over to gold. Now, gold and oil, gold especially, XAUUSD, gold has been in the spotlight again. Look at this. Look at this, right? Where are we at now? 36.33. Man, this thing's going berserk. I remember Kai had a nice position in this thing that he talked about. He had a straddle in this thing. When this thing breaks out, after the fact, it looks so nice and easy, right? My accent probably sounds a bit like, oh, really? Here, dear. Yeah, nice to know, Ricky. Even though he's not British, but maybe you spend enough time there, you start to sound like them. I know they don't all sound like that. I understand that there are a variety of British accents. That's just the only one I'm really good at. So you have this breakout, right? This range breakout, which is there's a great straddle from Kai. He talked about that. I'm sure he made out nice. He had November straddles on gold, and we're not even close to November. So man, that worked out for him. Look at this thing. This thing is going berserk. It's on its highs, right? So if you're not in this, there's nothing you can do here. Let's take a look at the weekly chart. These are all-time highs on gold. Why is gold going berserk? Well, we know why. Bad employment situation, 100% chance of a rate cut. There's a small percent. There's also, not only is there like 100% chance of a 25 basis point rate cut, but there's also now a small chance of a 50-point rate cut, 50 basis point. There's a small chance of it. So gold is going berserk as you would expect. Okay. So look at that. What do? You can't touch this thing now. If you're not in gold, you don't buy it now, right? You had plenty of time to try to buy into this consolidation. And that was it, right? All you have look at this, these little consolidations. Those are your only opportunities if you're going to take on some gold, right? Or you buy physical gold and store it somewhere. But that's like you don't trade physical gold. That's something you just buy and you sit on. So look at that. So you have that. So now is not the time to be buying gold. Now is the time to be locking in profits or whatever. Maybe you bought some paper gold. Now would be time to take some profits. But speaking of gold, how much higher can this thing go? Who knows? Everything that we're seeing in the news, and I know a lot of it could be propaganda, but everything that we're seeing points to hyperinflation. So we could take like a tool like the extension tool, right? The extension, and we could do like a measurement. We could do something like this, and we can look and see, well, where are we on this roadmap? We're at the what are we at? The 4236. And we're right up there. Like that's wild, man. Right? That's just wild. So if we're going to use this as any type of reference, then we're looking at 38.83 is the next symmetrical structure on this thing. Okay, gold can go to infinity. Yeah, true. So, but there has to be some sort of inflection points, right? So when you measure them like this, and you're basically looking at market structure. If you notice, they don't line up exactly, but they're close. I mean, this one's not even close. This one here. But look, the even like the 3618, there was some sort of consolidation there. Okay, and now look where we are now. Okay, the 4236, there was a little bit of a range inside there. So these can serve as reference points for at least, okay, maybe I should be taking money off the table there or something. But that's it. I would not count on those numbers for like a resistance and be like, oh, I'm going to sell it. I'm going to short it. I would not do that. Plus, we have no price action, nothing that confirms that this thing is, a good sell right now. Like this is just straight on vertical. You let this thing run until it gives you some sort of bearish reversal pattern or something, right? So on that note, let's take a quick. There's nothing more to say about gold except where can it pull back to the range high. That's your most probable or higher probability level. You could use this little range right here, right? What is this? 3,500. Excuse me. We're at the high of 36 and a half basically. So 3,500, if you're looking to buy gold, that would be a place to consider it. Whether it's physical or you want to buy some paper gold or do options or whatever, that would be a good spot. Otherwise, some sort of pullback that pulls back and gives you a higher low above there. Hey, Izzy from Kuala Lumpur, how are you? Good to see you. Nice to see you. Thanks for sharing. Oh yeah, people remember my old instructions. If you want to share what city or country as a fun fact, that's always cool. They always put where country they're from. I always love to see that. I'm streaming from New Jersey, just outside of New York City, in case you're wondering. Okay, it's why I speak funny also, because I come from Jersey. We all talk like this around here. Parts of Jersey, anyway. Actually, not anymore. That used to be the way people spoke around here. In Brooklyn, they used to talk like that too, but not anymore. Anyway, all right, enough of the accent lessons. Let's move on to, let's just take a quick look at silver. Okay, so XAUUSD, and they should be moving in tandem, right? $41. Man, this thing's almost at 50. Silver. Man. But they move together, right? For the same reasons. Plus, silver is the greatest conductor of electricity. So you have all that stuff going for it, right? There's a lot of reasons why silver should be moving. Anyway, interesting to see. Same deal. I wouldn't buy silver now, right? It's the same deal. You got to wait for pullbacks on these things if you're interested in them. And it may take a month or two or something for a pullback, right? So just keep these things on your radar. These are bullish markets for fundamentally sound reasons. All right, let's move on. So whenever I look at these, I'm going to get to oil here in a moment, but I want to take a quick look at the bond market. We should always look at the bond market. The 10-year note, these are the 10-year note futures. What a surprise. Interesting. Wow, well, now we're getting a little feisty here. We're getting a little feisty. Let's take a look at the weekly. That's a pretty big move in the bonds, right? And that's, again, a result of the labor market situation. This labor market situation is not good. So bond prices rallying, okay, which means, if bond prices are rising like this, that means rates should be going lower, right? We could take a look at the yield in a second, but bond prices rising, rates going lower. So this is obviously pricing in maybe the more aggressive rate cut, or maybe we get a series of rate cuts. Because remember, when they have the meeting, he has the press conference and he answers, all those dumb reporter questions. Mr. Powell, Mr. Chairman, can you tell us when you're going to cut next and by how much? And what we're going to do a wait and see thing. That's what we're going to do. Right? He says the same thing every time. So you know? So we have to see what kind of Powell movement, UTXO, we get next week. But the point is this: the bonds are pricing in something. And it's hard for people to understand. I get this question. You see sometimes this question pops up in the chat. Is the market pricing in? Yeah, the cuts are priced in. And a more aggressive cut may be getting priced in now. Maybe getting priced in. But I believe at this point, the 50-point basis cut, I don't believe it's fully priced in. So if he does something like that, I believe we see a further spike. Like the market will like that, at least initially. Just keep in mind, he can change everything at the press conference. But what I can tell from these press conferences, Powell never says anything that's going to upset the market. If you notice, he always plays it cool. He always like, well, we're just going to wait and see. He always says that. He never says, we're only cutting this one time. You can all go screw yourselves. He never says that. He never says anything hawkish or anything that'll upset the market. So you have to suspect he's going to behave in a similar way. Now, so we haven't broken out of the range yet, but that's a pretty significant move in the bonds, right? Remember, guys, I've been pointing out this range. We've been in this range for quite some time, this consolidation. And I believe we're not going to do anything significant in the market until we clear that range. So this is the weekly time frame. Let's take a look at the bond yield. Excuse me. It's US US 10 Y, right? Now that's the inverse of this chart here, okay? This is the 10-year note yield. This is the interest rate. So clearly the rates are going lower, right? But you can see here, we're still in this consolidation. It's clearer to see. This is a weekly chart of the yield. We're still clearly inside that range. So the FOMC may have a significant effect on this and any other heavy duty data coming out after that, right? So what would be next? The next major non-farm payroll, the next CPI report, we're talking about next month. There'll be I believe there's another meeting, November and then December. I know in the next 3 months or next 4 months, there are 3 meetings, right? So the first meeting is going to be this month. And we have 2 more meetings after that. So watch this chart because this is going to be, I think, the tell when the market's going to do something more dramatic, right? We break this low range. We break this, man, that means gold and silver, everything should be going through the roof at that point because that means rates would be breaking a pretty significant low. And look, I mean, even historically speaking, going back to 2021, look how high the rates are. So we're not even close to like significant, we're not even like at major lows. We're just looking at breaking a range low. So we got a lot of room to play with there. I mean, I don't know about you, but that looks like the recipe for hyperinflation to me. I don't know. Anyway, so you guys follow that. So my point is, keep an eye on this chart. We can't forecast where this is going to go. It's going to depend on how the economic data shapes the markets in the next few months. Just keep an eye on this, right? Because that'll be your first tell. So that's the bond yield, the 10-year note yield, right? And this affects everything. Your stock portfolio, your 401k, all that nonsense will be affected by this. If rates are going lower, which that's going to be a good thing on the short term, you're going to see your 401k, your stocks, everything is going to be partying. It's going to be a party in our pants, man. That's what it's going to be. Everyone's going to be happy. Perfect for the holiday season. People can borrow some more money and buy gifts and all that stuff. It's going to be party time. But when party time is over, that's when that's when with the musical chairs game, you want to make sure you have a chair, right? That's all I'm saying. All right, and at some point we're going to see that, but as long as they keep with this rate cutting thing, at some point they're not going to be able to do this anymore, right? The talk that I see, I mean, it could be propaganda, right? The stuff that I see on the internet and on YouTube, I take it somewhat like I'll take it in and like, okay, that means something, but I don't bank on it. You know what I mean? So at some point, they're going to, there's going to be a problem with the deficit and selling these bond auctions, right? That's going to be a problem. There are going to be too many bonds, and there's not going to be enough people to buy them. So the Fed is supposed to step in. This is all part of the plan. This is not a secret. The Fed is supposed to step in and make up for the people that aren't going to, the investors that are not going to buy the bonds, right? Because in order to attract the crowd large enough to consume $2 trillion worth of bonds, rates are going to have to be higher. So if we're not in this rising rate environment, we're all about cutting rates, then how are we supposed to attract enough investors to consume $2 trillion worth of bonds? So the Fed will come in, they call that quantitative easing, right? They're going to print the money and lend themselves the money. I don't know, man. It just doesn't sound like a good idea to me. But anyway, watch out for that stuff because that's when things can get wild. Anyway, all right, so let's move along. I covered the bond market. Let me do oil real quick, and then I'm going to jump to your stock, man. Ricky, I haven't forgotten about you. So let's move on to oil real quick. Let me know if you have questions, guys. CL1. Now, remember, I'm not an economist, and I come across a lot of stuff. There's some people that I watch on YouTube that I find to be, they know what they're talking about, and I like the data points that they cover, and they make sound arguments. Doesn't mean that they're right, but I just happen to agree with the data points that they're talking about, and it all makes sense to me. You know, I'm a believer in if we have inflation, you raise rates. That's just what I believe in. Not keep cutting and cutting and cutting, and just basically pour money on something that's going to be problematic in the future. But anyway, all right, doesn't matter what I think. Here's the weekly chart of oil, right? Oil has been consolidating. Look at this. So let's go to the daily time frame. I know, Ricky, I think you've been talking about oil, right? I think you had a position in oil. I remember you were asking me about it. So we've determined that oil, this was that wave 4 overlap situation. Oil is not in a trend. Oil is more likely in a range. And when you're in a range, you just look at the range, support, and resistance. You just want to focus on support and resistance levels when it's likely we're not in a trend. Now, we have a lower high over here, failed high double top situation at $65. We're sitting on a low of like, what, 62? And it's trying to find some support there, right? That could be a double bottom. That could be a failed low. So if you're looking to short oil, this is probably not the price to do it. If we form an inside bar here on oil and it breaks the low, that's not really an inside bar. But if we do something like that, we break that 62 support, we're pushing 61, then maybe you get a breakout and follow through. But oil is not exactly in a trend here. Okay. Oh, okay, cool. You make money on it? I don't remember if you were long or short. But oil is not exact. Like, I would not be excited about going short here. This, if anything, it's a potential long because I'm anticipating the consolidation rather than a trend. Can we argue that there's a trend here? I mean, you can argue there's a lower high, yes, but we haven't made the lower low yet. And it's fighting to keep that. It's fighting to maintain that low. Now, keep in mind, weaker dollar should be good for oil, but we're not seeing that. Now, remember, oil is sensitive to other things. It's not just the dollar. You know, we have, gold rally, silver rally. We saw Bitcoin trying to turn around there, right? Oil should be doing a little better than it's doing, I would think, based on weaker dollar. But oil has other things that drive it. So keep that in mind. Okay. Oh, nice. Okay, Ricky. Cool. I'm glad you got something out of it. Made a little money on that short. Nice job. All right. Nice job, Ricky. I have to say it in a British accent. How do you say, Jolly-o? I don't know. They say that. I'm making up words now. All right. So anyway, all right. So Izzy, okay, cool. Dogecoin. We'll take a look. All right. So that's pretty much it. Like on the markets that I generally cover. So we're going to move over here to TSLA because Ricky asked for it. I asked you guys if you have any other requests. So we got that and we got Doge. So I'll take a look at those too. Unless you have questions about oil. So oil, pretty simply, I say range bound. Look to play the range levels if you're looking to do anything with oil. in my opinion. Let's move along. Let's take a look at TSLA. So we're moving on to the stocks now. Keep in mind, this is a widely followed S&P stock, right? It's going to be sensitive to the S&P and the Nasdaq. You saw my analysis earlier about the S&P. So everything I said about the S&P is going to be relevant to a stock like this. Now, let's go to the weekly time frame. That's a good place to start. Whenever you're analyzing a stock or any market and you're not exactly familiar with the levels and all that other stuff, start with the weekly time frame because it kind of gives you a broader view first, right? So I can see here, I mean, again, it's got that similar pattern to the S&P where it's just kind of acting it's just following along, right? Excuse me. It's hard to say what kind of trend is here. On the short term, we can argue that this is bullish. And again, with that all that tariff nonsense, right? It's sort of that's a bullish structure right there. All right, no position at the moment. Looking for a good entry point for long or short. Swing trade, okay. Excuse me. Sorry, I don't like coughing into the mic. Apologize for that. What are you thinking, Ricky? Long or short? That can also help me shape, how I look at this for you. But without any bias, I would say that early structure is bullish, but you're thinking long. Okay, good. So it's a little conflicted. We have that S&P vulnerability that I talked about, right? Which will affect this. So I can understand your long idea, but here's where it's conflicted. So you have a double top developing here, and that double top is a lower high relative to this. So that's not exactly a great bullish argument. Okay. This is most likely in some type of consolidation. Long is tricky here. I would say swing trade long is tough at these levels because you have this double top situation. Now, maybe it breaks out, but as you know, I'm not a big fan of those breakout type of trades. What's going to affect that, of course, is the outcome of these economic events that we have coming up. Also, if they have a company report, a quarterly report that, you know how they are with these reports, they usually come out good, and that can help it along. But I think that the FOMC in the next couple of months will be telling as far as do we break out? And I would imagine if we break out, the S&P is also going to be doing something bullish. If the S&P is doing something bearish, this thing is in a very vulnerable position. I would not want to be long at these prices, right? So if you're interested in the long, Ricky, let's go to the daily time frame, so we can basically identify more attractive prices. Now, it's good. Swing trade, I think, is a good idea because investing, I just think, is too risky. Because if the S&P turns, man, everything's going to turn. So you want to look at support levels. Here are your nearest support levels for this stock. We have an old resistance right here. This support, we could say that these are very close. What is this price here? 314.60. And this low over here is 325. That's like about a 10-point range inside there in that little square. So that would be a great spot for a failed low if you pull back into there. So I would imagine, Ricky, you're not interested in longs at these prices, right? I mean, that resistance is pretty clear to see. These are nothing but vulnerable prices. So your first area would be around like the 325, 320 to 315 zone. I would say something like that. That would be the idea. That would be the area that you'd want to set up for, your notification to pop up. Okay, we're in an area where buying may be more attractive for a swing trade. Then, of course, you want to see a reversal, some sort of confirmation. For a swing trade, you don't have to use daily time frames. You can go to a 4-hour time frame. In fact, let's turn on the Trade Scanner Pro and see what the Trade Scanner Pro says. Now, the Trade Scanner Pro has a long in play since when? Since July. There's been a long in play, okay, on the Trade Scanner Pro. So I'm going to erase my support levels here so we're not confused. And that long was called here on this candle, which is what? What is the close of this candle? 316, okay? And it never went to the stop. The stop was at 280. That's a pretty wide stop on this thing, but that's the daily time frame, right? But that's telling you this is your risk, right? Now, do you have to take that full magnitude of risk? You don't. And as I've told people, my when I was doing my day trade streams, and you could still watch them on my channel, don't use the Trade Scanner Pro for an outright signal. Use this signal as a heads up. The heads up says, okay, now you're looking for pullbacks. Now you're looking for long signals after the signal, right? And look, plenty of good prices, plenty of good prices if you use it that way, right? Plenty of good prices where it pulls back a bit and gives you a slightly better price than the blue line, which is at 314, whatever level, right? What is that price down there? Does it say a price? 317 is what the blue line is at. We could round that to 315, but you can get better prices if more times than not if you wait, right? So right now, Ricky, if you're using like the Trade Scanner Pro, you should be waiting again. And notice where I drew that where I drew the rectangle. Coincidentally, it's in that buy area, right? Where the blue line is. Coincidentally, right? Right? You see that? So I hope that clarifies it for you. If anything, we're nearer the price objective to get out, the profit objective on this thing, which is at what? 373. You see that? So the Trade Scanner Pro can be very helpful in that sense. You know, you're looking for a trade. It's like, well, where should I even be looking? Here you go. The blue line area is where you should be thinking about it. And the risk gap, which is this area here, I call this the risk gap. That's your ideal area to take a position. Now, I said you could look at a 4-hour time frame. Let's take a look. What does the 4-hour time frame tell us in terms of the Trade Scanner Pro? Anything? Let's see. I got nothing on here. Man, nothing? Nothing at all? What's going on here? It's got to be signal somewhere around here. Why am I not getting anything? I'm not getting anything on the 4-hour time frame? That's strange. Why is that? Maybe I have to turn it on again? I should see something on here. It's not looking at the signals. It's not looking back at the signals. This should give me like a look back. Oh, this is why. Got to turn these on. There we go. Look at all these signals. The most recent signal for Tesla, look, it's been giving shorts on the smaller time frame. Shorts. It gave a long over here. Right? You see that? These red columns are heads up. The red columns tell you a short signal is coming. The green columns tell you a long signal is coming. Remember, this is a 4-hour time frame. So this takes days, right? Make sense? That's the 4-hour. Of course, the reward risk on a 4-hour, like look, if I roll over this, it's going to tell us, right? The stop was 296. The entry price was 308. So it gives you an idea. Okay, the take profit was 327. This thing made 18 points on that move. So kind of give you an idea. This can be a very, very helpful tool if you understand how to use it. A lot of people don't understand how to use it. And even though I gave plenty of instruction for free on how to, people still don't get it. So they don't they don't stick around very long. And that's why a lesson I learned is it's not a good business for me at all, because no one knows how to use this. Now, of course, maybe I could do better on the instructional part, but you know, the retail trader is not exactly a good customer to rely on, as I've learned. I got to rely on myself. Anyway, all right, so you got it. That's this stock. Let me know if you have any questions. A lot of insight there. Let's move along. So we had another one. No problem, Ricky. Let me know if you need anything else. Okay. What do they say? There's a word. I can't think of it. I can't think of it. Anyway, it's like that English muffins commercial on YouTube. There's a really funny English muffins commercial with a British guy, but he's like from like, you know, He's like an old school British guy. It's hilarious. All right, there was another guy, Dogecoin, right? It was Dogecoin. I think Nugs wanted to see that. Let's move along. Let's take a look at Dogecoin. All right, I don't know why this is all right. So we have a signal here too. Let's just analyze what's going on. We could talk about the Trade Scanner Pro real quick. Trade Scanner Pro called it short on the daily time frame. And look at this. It went to the profit objective just about, but it never touched it. And then it went back to break even. This was called a long time ago. This is also back in July, which again, when you're dealing with the daily time frame, these trades play out for weeks, right? And since then, it hasn't been. If you failed to get out or you're still on this thing, you basically you're breaking even. Also, this is one of those situations where when it initially was called, it pulled back to the blue line, but it never went back inside. So taking a trade like this, like there were a couple of instances where it tested the blue line, which is your entry price, but it never went inside. So if you're more conservative, you may not have taken this trade. But anyway, let's turn the Trade Scanner Pro off for a moment, right? And let's just take a look at this thing from a analysis perspective without any bias. And we're going to go to a weekly time frame. Now, keep in mind, Bitcoin has been pulling back, as we saw, right, off of the 124 high or whatever, 123K high. And we pulled back to what, 107, I think was the low? Something like that, right? I know we were below 108 briefly there. So keeping that in mind, I mean, I don't see, there's really not much of a trend that we can see here, right? Looking at the weekly time frame. It's not clear, it's not crystal clear. Like, Bitcoin has shown us, like crystal clear stuff. This is not. So we had this bearish structure for a while. It double bottomed over here. And since then, I mean, it looks like this thing has just been in a consolidation. Look at this, right? Look at this. It's hard. Can we really count any waves here? 1, 2. This is possibly 3, but this is not a fourth wave because the overlap is pretty clear. Look at this. If we're calling this a wave 1, wave 4 should not even be anywhere near it. So that's on the weekly. That's not really, we can't really classify that as a trend. Let's go to the daily time frame. So if that's not a trend, hey Kai, how are you? We were talking about your gold position earlier. Nice gold. Are you still in that? So gold's been out of control. So as far as Dogecoin goes over here, we can argue, and on the weekly and even on the daily time frame, that this is not exactly a clear-cut trend. You can start to say, all right, well, this is a wave 1. You can start to argue that, right? Or looking back, well, is that a wave 1? This would be the wave 1. You have to go to the lowest point, right? That would be like the wave 1, wave 2, and this entire thing, we'd have to say this is 1 of 3. I mean, that's what we'd have to say because it's not a wave 3, right? Because this is not a wave 4. Does that make sense? You're still in it. Nice. Oh, wait, so you got out of the short part of it and now you're just in the calls? Because I remember you had a straddle. So it's nice. It's how an options position evolves, right? You start out with like one thing, and then when the market shows its hand, you can close one side of it and bet on one side, right? That's normal with options positions. But nice job on that. That was a great call. So he called that weeks in advance, by the way. That was like way in advance. Nice, a great example of when to use a straddle, a long straddle. Now, so as far as Doge goes, yeah, this is, what do you do with this? Well, all right, so I'm going to treat this as it's in a range, and you have like a range within a range, and it's attempting to break out. The question, this gets tricky right here. What do you do with this? Well, you can anticipate the breakout possibly, but the general structure on this thing has been generally either bearish or range bound. So I would not be excited about the breakout. I would consider that more aggressive or higher risk if you're interested in buying this thing. At this moment, there's no reason to sell it either. You don't have any bearish candles. You don't have any bearish reversals. There's nothing there. So what to do with something like this? Well, so you have your resistance. This is pretty clear, right? You have a resistance. Can I get a square? All right, that's your resistance. What price is that? 24 cents, right? You could maybe even round that to 24 and a half, maybe 25 cents. Like the high here is 25.83. So you want to round that to the whole number, 25 cents, something around there. That's because it could fake out up there. That's your resistance. Okay? That's your resistance. Right, no problem, Kai. And thanks for calling it out again in the chat. You know, so whenever if you ever have another idea and you want to share it in the chat, hey, it's always welcome. So, you know, Kai is a guy, he knows what he's doing. He's been following me for years. So, you know, he's not just some guy. So guys, keep in mind, right? Or Nugs, you asked about this. That's a place to either get out of what you got or sell something, take some profit or something. If you want to buy the breakout, it's aggressive. And you're going to need to see follow through. You know, so follow through means you get the breakout, you see a nice strong candle, and you don't see a red candle after that. If you notice all these breakout attempts previously, right? Breakout attempt. This is not the candle you want to see after a breakout attempt. You see that? Look over here. The pin bar tried, turned into a red candle and a pin bar. You don't want to see that. That's not what you want to see. That's a fake out. So if you get involved in a situation like that, Nugs, maybe you could share with us what you're thinking. Like, you're thinking long or short with this thing. If you're thinking long, I mean, that's the breakout argument right there. You want to see that breakout. And so let's say you buy it during the breakout and you get a strong close. Okay, trail your stop below that breakout candle and hope for the best. If you see a weak close and a pin bar and you're still in it, you know, hopefully your risk is well defined because you're looking at, you know, taking a stop out. Oh, I'm sorry, Nugs. Izzy. I confused you guys. I apologize. Izzy, what were you thinking? Long or short? Nugs would never ask about Doge. He's a Bitcoin guy. All right, sorry about that. Well, if I could see you guys' faces, then maybe I would know better, right? Maybe I just see names, and usually I'm good with names, but I'm not perfect, guys. I apologize. Okay, so Izzy, if you're still there, I don't know if you're thinking long or short with this thing, but so I gave you the long scenario, right? Now, what about, I mean, if you're thinking short, it would make sense at a resistance level if you get the confirmation, all right? If you get the confirmation. With these things, keep in mind, if Bitcoin, you know, Bitcoin has that bullish move, right? So we're seeing the bullish move across the board here. If Bitcoin continues, and I'm wrong about that whole wave B thing and that whole bearish scenario that I've outlined, if I'm wrong about that, and we're actually still in a wave 4, and now we're going to watch wave 5 unfold, if that's the scenario we're in, we're going to see these things break out to new highs. And then you're going to see all the altcoin season morons come out. Altcoin season. I'm rich again. You're going to see all those clowns come out calling altcoin season, right? You want to be in before that. And when they come out with altcoin season, you want to be selling to the dumb money that comes rushing in when all their fake gurus start calling for altcoin season again. I'm just saying, right? So it seems to me it's a gamble, right? And well, you know, again, look at gold. You know gold. You don't have to even look at it. Look at silver, right? We looked at the bond market. I mean, it looks like we're on our way to the inflation highway. Looks like we're on our way. Like I would suggest go to Home Depot and buy some wheelbarrows or invest in Home Depot. A lot of people are going to be buying wheelbarrows. We're going to need them, okay? Because our money, well, either that or you could use your dollars for toilet paper, maybe. You run out of toilet paper. Where are those dollars at? I ran out of toilet paper again. I need dollars. Where are those dollars? Because I don't know, man. I don't know. I'm no economist, but I don't know, man. So all I'm saying is that's the bullish scenario. We may altogether, maybe question of hyperinflation this year. Right. I mean, that's what it looks like. So how do they get out of this one? I don't know. I don't know. Maybe we just continue to pretend that our dollar is still worth something? You know how we pretend everything's pretend? Maybe we'll all go on Instagram and we'll, oh, look, a dollar, man. My dollar's worth something. I could buy something with this. And we'll all pretend on Instagram, maybe, because, you know, we live in a pretend world and everything is fake. I don't know. I don't understand. You know, so I'm very confused about that. But so going back to this thing, if I'm wrong about Bitcoin and Bitcoin is in a wave 4, and we see the wave 5 unfold and we start to go to new highs because everything else is going to new highs because of the inflation, then these things are going to likely follow. I would suspect they will follow, right? So that's the argument on the bullish side. To me, gold is because gold is a play if you believe in stagflation. Okay, right. And there's a lot of right. So you have those reasons, Kai. Plus the situation, like the stagflation or whatever you want to call that situation we have here with this deficit, because they don't seem to be going the right way with that. They just don't seem to be, you know, printing money, lowering rates, and being prepared to buy when no one wants to buy our bonds. That doesn't sound like anti-inflationary ideas to me, you know. So what do I know? So anyway, right. So there's a lot of reasons for gold and silver, and so these altcoins can potentially benefit from that. And that's all I'm saying. So be aware, keep an open mind. But generally, I do not believe these altcoins really have any value, especially this one. It's a meme coin. It only has value because it's just dumb. Who's the dumber guy, right? Who's the dumber investor? You buy it and you hope that someone dumber than you comes along. That's how these things work, because they don't have any intrinsic value. It's just it's moron fest, right? So with that being said, keep an open mind. I would be, if you're thinking, Izzy never answered my question, so I don't know if he was thinking long or short. I gave you guys the long argument, and this is going to apply to a lot of altcoins, especially meme coins, because they're mindless. It's moron money, right? But it doesn't mean you can't make money with it, as long as you're aware of what to anticipate and what the market actually shows, right? Now, so, oh, you're thinking short. Okay, thanks, Izzy. Thanks for letting me know. So I gave you the long scenario. Short makes sense. I agree with the short. If you right, the range high, I get it. Yep, I agree with that. But like I'm saying, if I'm wrong, the market will invalidate that idea. So you're at the range high. Yes, that's a good observation. You don't have any confirmation yet. A good idea would be go to your smaller time frame. Let's take a look at the 4-hour chart real quick, right? I mean, look, that looks like an ideal situation setting up there. What does the Trade Scanner Pro tell us? Look, you have a heads up on the Trade Scanner Pro, right? So a short signal is likely to appear soon on this thing. That's what that tells us. In the next 3 to 5 candles on 4 hours, that could be a day or so, right? So you have the right idea. Just keep in mind, if it breaks through, then that short will get squeezed pretty quickly. Does that make sense? So you have to keep that open mind. Now look at this. On the daily time frame, the Trade Scanner Pro called a short. What was this? Back in July. A lot of trades were called back then on this time frame. Oh, we talked about this earlier. We talked about this before. It almost went to the take profit, and now it's back at break even. Right. Okay. Yeah, we covered that. Sorry. So you guys see that? I'm going to get rid of these blue lines because they're confusing. I just erased the Trade Scanner Pro. Yeah. I want to erase the blue line. Okay. So you guys see that? You see the contrast between the two charts? The 4-hour is like on another mindset, because the reason for that is the 4-hour is looking at this data, right? That's what it's looking at. It's looking at the shorter term data, where the daily time frame is looking at a bigger section of data, a much larger section. Okay, makes sense? And I mean, I have been laid off before, and oh yeah, I mean, I know like in Europe, it's like whatever goes on here in the US, it's like worse in Europe. Kai says, I bought the Sola speculating that the market may bet, and it's low exposure, though I am not sure myself. Right. You know, so these are good, some good points that you guys bring up. It doesn't matter like what we think or what the market we think the market may or may not do. It's what the market perceives, right? That's really what it's all about. What the market perceives. So the perception can change. From 1 minute, the market may be like, yeah, we're going to bet on these things because of inflation. We're going to have, the rate cuts and blah, 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 right? And then something else comes out that changes the perception. That's what we had back in April. Everything was fine, right? Everything was generally fine. And then a catalyst, that they shine a spotlight on the tariff details and everyone poops, right? Everyone soils their pants because of the details. So it's all about perception. That's why we have to keep an open mind, and it's not a good idea to marry fundamentals, right? It's just not a good idea. Fundamentals look a certain way right now, and they look pretty clear. And how could it be that us little people, right? I'm not an economist. Everyone has a Powell movement. That's right. We go from a Powell movement to what rhymes with Powell movement. How can us little people see the signs so clearly, but the powers that be don't see them? How is this possible? Right? So I believe that we just have to be told things, even though Powell, he's got to know. He can't be that ignorant, right? He's got to know. He has access to the best economists in the world working at the Federal Reserve, or even think tanks or whoever, third party guys. He's got to have the best information available. He also has to know that the data that comes from the government, he has to know that it's unreliable. He has to know. But he can't come out and say, well, we're not going to use that BLS stuff. It's complete nonsense. Because if he says that, the market will be like, whoa, what do you mean? What do you mean it's nonsense? Right? He can't say that. He has to follow a script. He has to follow a routine, an agenda. Someone says, look, man, just stick to the story and just do your damn job and shut up, man. Just do your job, right? At least stick to the story. And I believe all these government officials have to do that. Otherwise, they'll be the source of a lot of problems. And a lot of people, especially wealthy people, will watch their net worth evaporate. And who runs this country? Wealthy people, right? I saw a thing, and I don't know if I shared this with you guys. I'm always interested in like market statistics and stuff like that, and political statistics. And I saw a thing where just one billionaire has the same voting power of, I think it was 10 million voters. I think it was 10 million. 10 million voters can be represented by one billionaire. We have over 900 billionaires in this country. I'm not one of them, by the way. Okay? But there are over 900 billionaires, and just one, has the voting power. I think it's 10 million. Okay? Powell's core problem is that the solution, right, but this is politically impossible. Right. Like, and he knows, I believe he knows the right thing to do, but no one wants to pull that lever. Right. And I mean, the right thing to do is raise rates. That's what's been done historically. That's the right thing to do, not keep pouring money on the situation. But pouring money on the situation is good politically, because the politicians know that they'll lose their job in 2 seconds when everyone's out of a job, right? Because because companies can't continue to operate because interest rates are too high, right? But if you look what happens in the West, what benefits wealthy, right? That's right. That's historically speaking, right? That's just the way things are. So this situation where we keep pouring inflation, I mean, who benefits from that? We all know who benefits from that. It's not the little people, right? It's the little people who suffer. The Federal Reserve, right? There's a lot. I understand that argument. And yes, they are a problem. They interfere in things where they shouldn't interfere. But at the same time, you could say they're responsible for all the wealth that we have, the immense wealth that we have in this country because of all of their inflationary policies that we've seen for decades, right? They create all this money and then, the rich people just get more of it, right? You could say they're responsible for the standard of living. I mean, you could make that argument once they started with the money printing. Because before that, when you looked at the economy before that and how the cycles worked before that, before the Fed could really, we're talking decades ago, the Fed was very conservative. But, when they started to loosen up, right, and they got off this gold standard thing, that was like, anyway, I don't have to get into all that. You guys are pretty educated. You guys know that stuff. So anyway, but at some point there has to be like this is not going to keep working. And maybe the current administration says, well, you know what? Whoever's next in line, it'll be their problem. And that always seems to be like the way they do it. It's their problem. Let them figure it out. We just need this fixed for a couple of years and we're good. Right? And that seems to be the policy. That's what they continue to do, right? Because after these rate cuts, what's next? The quantitative easing. So, and I showed you on that bond chart, we got a lot of room for rates to go lower. A lot of room. So rates aren't even like low yet. They're just sort of like a little bit. They're not even low yet, right? And they want to lower them. Like, so they have a lot of room to lower. And we have inflation. And rates are sort of kind of higher, relatively speaking, right? We have a lot of room. So I don't know. Like I said, get those wheelbarrows out because I don't know how they're going to fix this one. I just don't know. And like I said, the red flags are usually painfully clear years. I've seen this a couple of times, years before the actual, when things can't handle this anymore. The red flags are usually apparent for a while and the market just shrugs them off. Right? And it's hard to understand. Don't try to understand it. Just that's why I always say, I'll leave you with this. Keep an open mind. Just roll with the market. Keep an open mind, but just be careful. Don't get complacent with your risk. Right? That's why I won't even buy one share of the S&P at these prices. I just won't do it. I want to at least, I told you the levels. I at least want to see something better than this. All right. Anyway, all right. So I'm not going to keep repeating myself. All right, you guys. So, you guys have any questions? I know I talk too much, and then I lose my voice. I talk way too much. Any questions, you guys? I covered pretty much everything. Makes sense? Does this stuff make sense? Do you find it helpful? Cool. I appreciate that. Let me know. Like, are there any other feedback that maybe you guys want to give me? Like I said, you're not going to hurt my feelings. Got plenty of girls for that. Anything else you guys like to know? Okay, cool. When moon? That's a good question. Yeah, I don't know. I I think our space program is more likely to get there first. But I don't know. So but if the dollar goes to zero, like it looks like, that theoretically that should be a positive for Bitcoin. Just ask Michael Saylor; he'll tell you. So just keep an open mind, people. Just keep an open mind, and when we start seeing support breaks, like I pointed out in the S&P, and you see those yield breaks like on the bond market, keep an eye on those things. That's going to be the tell where you're like, all right, I need to now go into, conservative mode. I need to now, lay off of things or take money off the table or protect myself. That's or maybe you want to start taking precautions before it gets to that point. But that's all I can say. Keep an open mind and be careful, with that, because again, this stuff comes out of nowhere and it moves fast. So just keep all that in mind. All right, you guys. So if I don't have any other questions and all that, I'm going to wrap this up. Enjoy the rest of your day, the rest of your evening, wherever you're in the world. And thank you so much for watching.